Okay, awesome. Well, we are live with another episode of the Insurtech Leadership Podcast. And I'm excited today to have Gemma Ros, CTO at the Zebra. And she's here to unpack their 2026 State of Insurance Auto Report through an insider lens. What's driving the state by state divergence, how affordability pressure shows up in shopping and churn, and where regulation, loss costs, and distribution dynamics collide. And because Gemma leads engineering and data, we'll also get practical on what it takes to turn messy market data into decision-grade insight, plus she builds teams and leads under real constraints. Welcome, Gemma.
Thank you so much for having me, Josh. I'm very excited to be here today.
Yeah, fantastic. So before we dive into the report, maybe it'd just be helpful for folks to understand, a little bit about your background and how you kind of moved into your role today at the Zebra.
Absolutely. Well, first of all, I was born in Spain, and like many children in immigrant households, I was encouraged to pursue a professional career. My parents really wanted me to become a doctor. Obviously, that did not happen. But that never really felt like my path, even at an early age. And even though I was always interested in technology, I also never considered that as a viable career. That's just not something that we did. So fast forward to my first job out of college, where I was working as an executive assistant for a fund manager in Boston. And I worked really closely with the research analysts who did most of their jobs on Excel spreadsheets. As you can imagine, it was very manual, very laborious. And at that point, I was purely self-taught. I taught myself a few programming languages, tinkered with a few web apps. So I volunteered to help them automate and streamline their research with some simple scripts, which was just a fun project for me. And of course, once they saw the impact this had and how much time they were saving, they wanted more and more and more. And for the first time, I really thought that this could be a path for me. It was fun, I was good at it, and it had a real impact. So I went back to school, I got my master's in computer science, and I landed my first job as a software developer at an investment bank. And after 7 years of Wall Street, that was enough for me. So I then spent the next 10 years in various other roles within financial services, primarily in insurance and private lending, before I ended up at the zebra.com about 3.5 years ago. I first came on as the head of engineering, and within a year and a half was promoted to CTO, where I now oversee engineering, data, cloud ops, data science, IT, and security. So it's a bit of a full plate.
Got it. And so we'll come back to that a little bit, but maybe just getting into the report a little bit. From your point of view, if you were to think of sort of the headline items from the report, both from a consumer perspective and then with our audience, maybe folks in carrier world or on the brokerage side, or even in insurtech, trying to figure out kind of where the market's headed. What are the key points you would highlight?
Well, I think the key point to really highlight is that insurance premiums do not move in lockstep. I think when people think about insurance, they think about this just very homogeneous industry, but it really is fundamentally local. And so what our 2026 State of Insurance Auto Report really highlights is that variability in where you live makes a huge difference in what you will see or what you will potentially see in your insurance premium. So for example, we're projecting that 19 states will actually see their premium increases early this year, but 13 may decrease. And again, what we're seeing isn't that really, it's not a random volatility. It's the result of our insights into state level loss trends playing out at different speeds. And what we're seeing is that there's a couple of different primary drivers here in this variance between the different states and how they're behaving. So the first driver that we're seeing is that our loss cost inflation has not been uniform. So different states have different levels of repair costs, medical severity, litigation trends, and even the vehicle mix vary meaningfully by state. And we do call out in our report like the different vehicles and what they might cost you, from the lowest that you might see for like a Ford Bronco at $76 a month to the highest, which is your Nissan GTR at about $400 a month. So the car you drive is really impactful in the premium you're going to pay, as well as where you're living. But then also the regulatory lag. Some states approved massive increases between 2022 and 2024. In fact, we tracked 18% national average spike from 2023 to 24. Just in that 1 year, premiums rose on average by 18%. But others delayed approvals, which means that some carriers are still catching up, though at a slower rate. And we saw that playing out last year, where we saw premiums rise by just 3% compared to the previous year. So it's slowing down, and it creates this appearance of divergence, but it's really just delayed timing. And then the third driver that we're really seeing is in carrier strategy. In markets where certain carriers pull back due to lack of profitability or margin compression, the competition really dropped, which then caused the rates to rise because there was not that price competitiveness and price comparison. But as rates have been increased and profitability is returning, the competition is re-entering the market, and we're starting to see some prices start to normalize, and that's what's driving some of the decreases in certain states, whereas other states are still continuing to increase to try and reach that new level of normal that will allow carriers to operate profitably in a much more durable market.
Got it. And are there additional sort of variances around, standard and non-standard auto or other segments of data that you see, interesting trends?
Absolutely. I mean, and one of the biggest things that we're seeing is, which could then, of course, tie into our standard or non-standard or preferred auto segmentation that is very common in the insurance industry. But it might not necessarily mean a lot to everyday consumers. But what will resonate with them is the understanding of how the credit score is impacting their premiums. It's not something that you may necessarily always correlate to your insurance premiums. But what we're seeing is that there's a massive difference in the credit tiers that people are having and the premiums that correlates to. So a shift from poor credit or fair credit to good credit could actually reduce your premium by, I'm sorry, I don't have the numbers in front of me, but I think it's like 47%. It's a massive increase by just doing a little bit to increase your credits to go from one to the other tier. As you get higher in that credit score, which also then correlates pretty closely to our preferred and standard plus consumers, the decrease is less. It's like in the order of like 20% or $200, but it's still material enough that it will impact your rating as you're reshopping, as you're looking at renewals or potentially shifting your carriage and your coverage. And then what we're also seeing is, because of course the premium is just one aspect of this, is really about, especially when you think about the non-standard or the consumers that might be more financially challenged, is that affordability is a huge talking point for them, where they might choose to have higher deductibles, lower coverages, go with the state minimums because they just cannot afford anything else, which is causing a knock-on effect on everything else, because now you're having to deal with underinsured or potentially non-insured drivers in your region that are going to be driving your premiums up. So as a companion to the State of Insurance report, we're also started working on this, and we introduced this new metric that we're calling ZIPI or ZPPI, the Zebra Premium Price Index, specifically to fill that gap between conversations around insurance premiums, which is one data point, and how that relates to median income and affordability. So for example, when we did our research and compared median income to premiums, what we found is that on average, Americans are spending now about 2.6% of their income, of total income, on auto insurance, which is ridiculous to think about. But in pockets, that's even higher. In states like Florida, Louisiana, excuse me, they're paying as much as 5% of their income in auto insurance. And that's a huge driver of coverage levels and potentially choosing not to be insured. So I want to make sure we don't just look at the premiums as standalone, because that also is relative to where that particular insured is living and the wage growth within that particular state.
Yeah. So these this affordability issue and the extreme nature in some of those states you mentioned, what do you guys see in terms of what that does to shopping behavior? And do you see political pressure, regulatory pressure cropping up in some of these markets that are more extreme?
Well, it's definitely a consideration. And this is something that regulators do consider when they're evaluating insurance rate increases specifically. They look at things like affordability, and they look at things like wage growth within the state. Every state, of course, you can imagine, because it is still insurance, is different in how they take that into consideration. And depending on some potential political pressure or consumer pressure, they may lean one way or the other. As a whole, though, we have been seeing trends that is investing in long-term market health. So making sure that the carriers are able to reach a price point where they can continue to operate, and trying to encourage more competition. States like California really struggled for a while because so many carriers pulled out. And so we're seeing some shifts there in consumer sentiment and in regulations to try and encourage carriers to come back into the market for that increased competition, because ultimately increased competition means lower prices as carriers compete against each other. So you have this balance, and I do not envy them their job of how to walk that tightrope between competitive nature, but also making sure that your consumers and your constituents are able to afford the insurance. But then we've seen some regulatory changes, specifically in Florida recently with litigation reform. That was a huge driver of premium increases and carrier pressure in the past, when you had, especially states like Florida, that's a no-fault state, that you have that invisible cost that is being borne by everybody who carries an insurance policy that's not necessarily reflected in those premiums. So there's a lot of different factors. It's a very complex, as you know, very complex industry that has so many different levers that one can pull, but it's always something that we try to keep on top of, so we can then communicate that to our consumers, because ultimately we are here to really help make a process that can often feel very opaque and very frustrating and very time consuming, insurance shopping, into something that's a little bit more transparent and more easily digestible, so that consumers can make truly informed decisions and right size their risk appetite. And so we try to find what's best for them, not just for their wallet. And that's where our advisors are like, oh, they are angels sent from on high, because they do such an amazing job of trying to walk that line with the consumers and getting to the heart of what they really need and what is going to be best for their financial profile as well as their risk profile.
Are there specific things that the Zebra does to kind of help consumers, or make sure consumers don't, chase price and underinsure, or at least make clear what the trade-offs are and the risks are of taking that approach?
Yes, absolutely. And I should say that everything we do at thezebra.com is really designed to empower that consumer. And so sure, in table stakes, right, you can get side-by-side quotes in minutes. But what we've also tried to invest a lot of time and effort in is in creating educational content. We create personalized tools, and we always have access to our licensed insurance advisors if people want that extra layer of support. They are really the best resource that we have in our arsenal, and they inform a lot of what we do on our site and with our technology initiatives. We want to make sure that we put as much information in front of the consumers as they need to make that decision, but we also want to balance that with we don't want to overwhelm them. So there's always that experimentation track that we follow to see, okay, what messaging, what information is going to help our consumers move forward and give them that edge, give them that confidence that they're making the right decision for themselves and their families without overwhelming them with technical jargon or insurance terminology. How do we make this more accessible to an everyday consumer? We spent a lot of time and effort, and our product engineering team is one of their primary drivers and focus is to try to make sure that we have that information accessible in a way that the consumers can look at it, can internalize that, and then use that to empower them to make the right decision. And then again, as I mentioned, we always have our licensed insurance advisors in our back pocket that are there to answer any questions, that they can talk you through different options. They can give you more information and more practical examples about what it means to do trade-offs. If you want to increase your deductible to lower your out-of-pocket, what does that actually mean for you? What's covered? What's not covered? Because that is not always very easy to determine just from looking at some insurance documents or like your deck page or anything like that.
Yeah. So you mentioned kind of vehicle mix and you mentioned credit score. Are there any other, risk signals that are taking on increased weight, like violations or, I guess we talked about geography too. And are there any areas where, the survey indicates the market may be miscalibrated?
Violations, of course, is always going to be the case. Ultimately, your insurance carriers are going to be balancing the risk profile against their premium that they're going to be paying them. And they always want to err on the side of less risky drivers. So any violations you have are going to be very material and meaningful to your insurance premiums. I don't see any place where that's unbalanced necessarily. It seems to be pretty uniformly when we look at the wealth of our data, that there's no one place stands out. You're not going to be penalized more for in one area or the other. But what we also try to do at thezebra.com is try to proactively counsel and advise people as to when they should be looking at their insurance at a minimum. Hey, we see that you have a ticket that you got 2 years ago, for example. That is going to roll off your insurance profile in another year or so. So can we set a reminder to reshop for you? And we'll do that automatically for our consumers so that they don't have to worry about it. We can kind of like our set it and forget it option. We'll track prices for you over the next few months. And if we ever see any dips, because prices are changing constantly. And so this is one of our constant piece of advice that we give people is just, even if you're not necessarily up for renewal, it doesn't hurt to shop around once in a while, because filings are being approved on a daily basis. Legislation is being filed and going into effect on a daily basis. Risk appetite from carriers, competition is shifting. Do they want to be more aggressive in growth for new business? And so one of the signals, like, hey, if you start seeing a lot more ads for insurance companies on TV or on radio or on podcasts, wherever you're listening to, that's a good time to maybe start to think about reshopping, because that is the carriers are signaling that they want to grow. And when they want to grow, that also means that they're going to try and be more competitive because they're trying to capture market share. So we'll try to partner with our consumers to do that price shopping, that reshopping for them. We also offer, as in one of our core feature functions, is price tracking. So if you give us your profile that you're searching for, we'll do that for you in the background. And if we find savings for you, we'll proactively notify you to say, hey, we found maybe a better rate for you. Come take a look. If you like it, great. If not, no harm, no foul. We'll keep looking for you just in case. And so that's one of the things one of the pieces of advice that we always try to give our consumers is that don't just wait for a life event or a renewal to shop. Be proactive about it, because we're entering this area of normalization and growth that could signal a lot of different changes in premiums coming in the next probably 2 to 3 quarters.
So maybe we can jump into that. I mean, as the regulatory lag catches up and you have the 13 states or other markets kind of playing catch up, are we entering a period of stabilization, or what exactly are you seeing coming over these next 2, 3, 4 quarters?
Yes, I think we are going to be reaching a period of stabilization. We don't expect to see growth in the same spikes that we've seen over the past few years. And we saw that last year with just a 3% increase. But I don't expect the prices to go down. I think once you have that, where you might have some price softening, you might have some regional or local decreases, but overall on a national level, we're probably going to continue to increase, right? Inflation never goes back. So the cost of repairs, the litigation costs, the driver costs, the weather costs, those are not going away. It's just a matter of, are we now in a sustainable growth period, or will we need to have this surge again? One of the things that we're starting to look at now, but we don't have a ton of data yet because, of course, it's still relatively new, is how electronic vehicles, how EVs also enter into the mix. These are cars that there's not a ton of them on the road yet, so there's limited data in terms of how their repair costs are. But just on the surface, the repair costs are much more expensive, much higher for those vehicles. Every time, even for an internal combustion engine vehicle, they're getting much more sophisticated. And so the repair costs continue to go up. And what we're keeping a close eye on is like, are those outpacing the rate increases that the carriers have gotten? Because that could be a leading indicator that a rate increase is coming. If we continue to see that, right? We saw tariffs have massive impact on this because most of these parts are not made in the U.S. and so they have to be brought into the country. That adds yet another layer of expense for the repair technicians to be able to either have to absorb or pass on to the consumers, which in this case is the insurance companies paying for those repairs. So because of that, it does seem like we're slowing down, but I do still continue to expect that to increase throughout the year and into the years to come.
Yeah, I actually have a Tesla, and I was kind of wondering if I had someone hit my vehicle, unfortunately, and I was kind of wondering, Tesla kept a very tight rein on the number of shops that they would allow work on the vehicles and put pretty high hurdles in place for them to get on the radar. So I was wondering if that was artificially increasing prices, and it seems like they're opening it up to more shops now, and maybe that would have an impact. But I have sort of a random question. So this is something I actually have been meaning to investigate because I just heard about it the other day, but I was told someone is offering potentially lower premiums if you have a Tesla and use the full self-driving all the time. And I'm just curious, have you seen anything kind of outside the box like that, either in this survey or just in general, what you guys are seeing in the auto market that maybe doesn't necessarily affect everybody at the moment, but maybe could be a foreshadowing of what's to come, possibly?
I hadn't seen that specifically, but the conversation around full self-driving and even just driving assist it's a very hot topic in insurance right now, particularly around liability. Because when it's the car driving itself and you get into an accident, who's at fault and who's liable? And so what we're predicting is that we're going to start seeing, as that becomes more prevalent and more widespread, it's going to cause a shift in how auto insurance is just fundamentally underwritten. We think it's going to shift into a mix of a little bit of product liability. So more of the liability will shift to the potential car makers, automakers, as well as some personal policies for coverage around either medical or other damages that are done to people. And so that's not going to happen overnight. But that is definitely something that is coming. It's just a matter of when that happens and when we reach critical mass of coverage with those features in cars, that's going to come to forefront. But I anticipate maybe towards the end of this year, some early players are probably going to start making moves in that space. They may want to be first to market. You'll see some of the more tech forward or tech savvy insurance carriers that have access or greater access to alternative data, things like telematics, vehicle sensor data, information that a car carrier like Tesla might be willing to share with them to be able to generate their risk profiles and create new underwriting guidelines that will differentiate when a human is at the wheel versus when the computer is at the wheel. And we'll see that shift in terms of much more dynamic policies. So that's also one of the things that I'm actually really excited to see and how it progresses over the next probably 12 to 18 months is how we start incorporating real-time data analytics and vehicle provided data into underwriting and risk assessment. Because that's coming. We already have like the OTA updates. So there's that connectivity and there's always that two-way highway already in place. When that starts feeding into insurance carriers' actuarial models, that's going to be a game changer because that becomes much more personalized premiums. And we go from having a regional local insurance to now a personal insurance profile. And so that is going to be really impactful, especially for safe drivers who maybe live in an area that is not known for safe drivers, where you won't get penalized just because you live in a particular zip code or on a particular street. And so you'll see that starting to happen more often. And I think that the EV makers are going to lead the way just because that's the way the cars are built and the way they've been structured from the ground up is to have that constant level of telemetry.
Yeah.
It's a really, really, really exciting time to be in this. I don't say about insurance a lot, but this is a really exciting time to be in insurance.
No, it's interesting, and I mean, just having used full self-driving on my car and seeing the way it works. Like for those who haven't actually experienced the way Tesla does it, I mean, it's kind of mind-blowing. So, or maybe ridden in a Waymo or something like that and see how it actually works and sort of seems to think. I mean, it's one thing to have like the highway assisted driving. It's another thing to, have a car analyzing someone opening a door on the side of the road, going through a roundabout, making a right on red, all these crazy things that it does. So it'll be super interesting to see how this all comes together, in addition to kind of the personal data, like you said, if you have a progressive app or whatever that's tracking your driving and creates a personal profile.
Absolutely. So the zebra.com, we're headquartered in Austin, Texas. And that is one of the cities that Waymo has a very big presence. So I've ridden in many a Waymo. And the first time I did it, I had to take a video to share with my son. He's 10 years old. He's like, look, the future is now. This car is driving itself. It was really amazing to see and you could see the computations and the different sensors and everything happening. Yeah. But yeah, so it's going to be a new world.
Yeah. So if you were running a carrier's digital growth team, is there anything like you would take out, maybe a little different angle or different insight from the data compared to any of the things we've talked about today?
If I was running a carrier's digital team, I would not necessarily focus, not necessarily new insights. So sorry, let me back up here. What I would actually focus the team on is on what I'm going to just roughly call data hygiene or data structures. Because what we're seeing now is that, as you know, carriers are not necessarily the most always tech savvy or tech forward companies. They're typically operating on legacy systems, legacy workflows, legacy technology. And then on top of all these, they're trying to bolt on things like AI or some of these newer technologies like streaming data and stuff like that. The two don't always mesh very well together. And so I think that before we can take that next step function forward for carriers, they're really going to have to make a ton and a really big investment in their underlying data infrastructure, because ultimately data is going to power everything they want to do. Insurance is a data-driven business. And not even considering all the additional data points that is going to be incorporated into the next few months with all this real-time data streaming that I'm anticipating to happen. If they don't have the right structures to be able to ingest it, transform it, materialize it, visualize it, aggregate it in a way that can then be fed into AI models, they're going to put themselves at a huge competitive disadvantage, because somebody else will do it and they'll figure it out and they will be the winner. And they're going to be stuck with their legacy actuarial models that is reactive and not proactive. And just their pricing will always be catching up.
Yeah.
So that's where I would invest resources today. A year from now, that's a different story. But today, get your house in order, clean the basement, build that solid foundation, and then you can do the really cool stuff.
Yeah, cool. Well, I'm sensitive to your time, and I did want to, dig in more to kind of your personal story. But given that we're tight on time, maybe one question for you. Just putting your CTO hat on. There's obviously a lot going on in the technology front right now, and obviously everybody's talking about AI, and there's new tools and new strategies people are thinking about that maybe in some cases trying to make decisions. It seems like minute by minute, if not second by second.
I think minute by minute is pretty accurate sometimes. Yes.
But if you could step back and just think about 2026, like what are you trying to optimize for this year? Are you thinking about data quality? Are you thinking about reliability, speed, cost discipline, kind of not chasing the latest and greatest tool? What are you trying to optimize for this year, and why?
My biggest focus, and that's a great question, first of all, is really on, we've talked about everybody's focusing on AI right now, of course, rightfully so. But for a long time, it really felt like AI was just a hype. It's really cool. You can do some really flashy demos and really, really cool apps, but it was not being integrated or incorporated into our core workflows and core processes. And so it was really just more gimmicky, just like a press release. Say, yeah, look, we have this cool thing, but it's all surface, no depth. So my focus for this, and we were no exception, we were experimenting, we were learning, we were, again, new skills, things are changing on a daily basis. but my focus for this year really is how do we turn our AI initiatives and our AI tooling from this experimentation, proof of concepts, is into true business drivers. And that kind of goes back a little bit to what I was talking about with the insurance carriers, is that we are focused a lot on our data infrastructure and making sure that we're setting ourselves up to be able to feed these monsters of these models that are coming up and that we've already started incorporating in specific areas of our product. So trying to make sure that we can move away from these proof of concepts, these little test apps, into more practical implementation. And so we really think about how does that, what needs to shift. We're looking at everything from our core software development lifecycle to our deployment pipelines, to our test coverage, to our cloud infrastructure. Where do we need to make changes and investments today to be able to be ready for the future? And so that's my kind of like my mantra and like my theme. I have a few themes, but like my main theme for 2026 is taking AI from fun to material impact. Not that it's not fun to do the material impact too, but it's just more about how do we do it at scale in a way that it's repeatable and it's something that every single engineer under an organization can operate with or can work with, versus just a couple of testers who might be just natively interested in that technology.
Yeah, great. Well, Gemma, this has been a really interesting conversation. Like I said before, I could probably ask you a dozen more questions easily, but anything else that maybe we missed or you'd like to hit on before we do wrap up?
No, again, just if I could leave audience members with just one thought, is just that it's never a bad idea to shop around. Like, just educate yourself, know what your options are. Myself included, I'm guilty. Sometimes wait until we get that renewal notice to be like, oh, dang, now I got to do all this process. But there are, there's tools out there that you can do to learn more about the industry, about your products, what it means for you specifically. And then don't be afraid to ask questions. I mean, I've been working in insurance now for years, and I feel like I learn something new every day. It's a very complicated and complex industry and product. So don't be afraid to ask questions. And just make sure that you try to make the best choices for yourself, with help from wherever you can get it. So yeah, that's I guess I'll leave it at that.
All right, great. Well, Gemma Ros, CTO at the Zebra, thanks so much for joining me on the Insurtech Leadership